Good afternoon. Online people? Yes. Audible? Yes. Great. Okay. Last class we had discussed certain things related to what? Inflation. Do you remember everything? What percentage of what has been taught in the last class do you remember? 70%, 80%, do you remember? No? Yes? Did you revise or not? You had an entire weekend. You have revised? Okay. Where did we stop exactly? Bracket creep. Nice place to stop. Yes, sir. Front of you. What's your name?
Nikhil.
Nikhil. What's bracket creep?
So when the government pays you extra so that the profit makes it looks like a loss for the company.
Bracket creep.
There is a two employees. One will get 11.7 price, and another will get 12.
You are giving an example. Can you just give me a definition of sort? Profit reduces? Earning reduces? Income. Bracket creep means tax bracket. Right? Tax bracket creep. What happens? Whenever a person gets more income as a result of increased salary due to inflation, basically due to dearness allowance. They give you dearness allowance. Whenever you get a dearness allowance, and if you are sitting in the margins of the bracket, tax bracket, you will go into a new tax bracket. Just because of going into new tax bracket, you will be taxed extra. So actually you thought you are going to get 50,000, 60,000 extra, but because of entering a new tax bracket, there will be tax cut, right, from your income. So you will see lesser income as a result of moving into a newer tax bracket. That's it. For that we gave an example. Before that, what concept was there? Dirty work done by the RBI. We spoke about dirty float. Yes. Then we spoke about impact of inflation on exports, imports, on exchange rate. That also we learned. Okay. Just to recap that part only that part. Exports, imports, exchange rate. Only this part. So you tell me, when there is inflation, our rupee appreciates or depreciates? Appreciates or depreciates? Depreciates. Very good. How? We have seen already. Whenever the rupee depreciates, what will happen to the exports? What will happen to the imports? Exports will increase. And are they expensive or cheaper for the foreigners? Cheaper for foreigners. That is why they increase. Correct? Imports decrease because they are costly for domestic consumers. Correct? This is about depreciation. Instead of inflation, if there is a drop in inflation or deflation, what will happen? Appreciation happens. Whenever appreciation happens, exactly opposite of it happens. That's it. Whatever you learn in economy, you learn it in this way. Write flow charts, right? Make connections, you'll remember. The reason why you understand very well in the class is because it is with examples you keep drawing. And when you see the text, it will be just lines of text. There it is. That is why I always suggest whenever you read the textbook also, you keep drawing something like this. You'll be able to remember really well. Okay. Was there any other concept which was difficult for you in the last class? Anywhere you had difficulty? What will happen to people who have invested their money in bonds and shares? People who have invested money in bonds, they will be earning fixed interest, let's say. Yes? They are as good as fixed income earners. For all the fixed income earners, the problem is the value of money keeps getting, value of your currency keeps getting eroding. Value keeps, decreasing. Because of which, what is it? It's a loss. For whom? Bond holders. On the other hand, shareholders, they own equity, profit for the firm, correct? Because of inflation, profit for firm, and you are part owner of the firm. Why? Because you hold the share. Profit for the firm means gain. Now this is short term. However, in long term inflation, whenever the inflation is long term, what will happen? What will happen? Long term inflation. So this is short term only. So for producers, for shareholders, this is the thing that happens. But in long term, what will happen? In longer term, you think about it, the prices are going up, I am making profit as a producer. Over a period of time, if the prices keep on increasing, what will the employees do? They will demand for higher wages. The cost of production will increase for me automatically. Yes? Which is going to cause what type of inflation? What type of inflation? Built-in inflation. It is called built-in inflation. What is the other name for built-in inflation? Anybody from the back? What spiral? Huh? What is it called? Wage price spiral. We drew a diagram as well for that. Yes, it's called a wage price spiral. How many times did you revise? 2 times. Do you have economics background?
In 12th.
In 12th standard she has studied. So, 2 revisions had you done? Honestly you tell me, have you done 2 revisions? So you don't remember. I told you one thing about this subject. This is a wonderful subject, you can remember everything. Provided you do revisions. Why? Because it is a very, very logical subject. A very, very logical subject. There is reason behind everything. That's not the case with other subjects maybe. For example, history. Something happens. Why did it happen? It happened. Right? So why did Aurangzeb introduce something? He liked, he introduced. No reason. He has his own reasons. Logic nahi hai. Polity. Why should the president have this power? Why? It's written. Getting my point? That's not the case with economy. Yes? Fine. Next. Measures to control inflation. Measures to control inflation. Supply side measures. What measures can be taken from the supply side? What measures can be taken? Whatever is in shortage, because of shortage, if there is inflation, shortage of goods in the market, that is why if there is inflation, import those goods and services. There is too much demand for certain goods in the market, that is why the prices are going up. You do one thing, you import them. Yes, so increase the supply. Usually, to import those goods and services, how to promote the import of goods and services? Usually, you have to reduce the barriers to imports. What are the barriers to imports? There are tariff barriers and then there are non-tariff barriers. Tariff barriers means basically just think about it as taxes, custom duties. Reduce them, automatically imports will look cheaper and people will buy them. Second thing is non-tariff. This is more about standards, quality control, these things. If you say restrictions related to quality checks, if I reduce also, then also they can make the entry much more easily. So whatever is in shortage domestically, and because of the shortage if the prices are going up, what should I do? Import those goods and services. This is one. Two. If there is shortage of those goods and services, we can also do one more thing. Increase the export duties. Basically, restrict exports. Correct? Increase the export duties, that is, restrict the exports. Don't allow exports to happen. If somebody wants to export those goods and services, put more taxes on them. Automatically they will become costly for a foreign buyer. They will not buy. Done. Make the licensing much more difficult for exporters. More approvals you have to take, only then you can export. Understood? Right. Next. Logistics and infrastructure. Maybe cold storage, transportation, warehousing. Yes, when you improve these things, what are they? Cold storage, warehouse, transport facilities. When we improve these things, then also whatever supply shocks that might be felt in some markets, they can be reduced. Yes? And then what is that? Anti-hoarding measures. Laws to control hoarding. Laws to control what? Speculative trading. So this is also one more thing that can be done from the supply side. Accordingly, you have Essential Commodities Act as well, so that you can't hoard certain items, right? for the sake of profits. Essential Commodities Act, ECA. So you'll be learning about it later on. Don't worry. Done. These are the things which we can do so that supply of goods and services are happening properly. Okay, if some of the goods prices are increasing because there is excessive demand, then we can do these things maybe. This is one side. In whose control is all these things? Government. So supply side measures can be handled by usually government. Next. Cost side measures. Cost side measures. Excise and custom cuts. Excise and custom cuts. On what? On raw materials and certain goods, especially capital goods, we can say. Excise cut. What is the excise duty? What is the excise duty? Excise tax. Have you heard of excise? What is the tax on? So tell me, what are all the taxes you know? Let's see. What are all the taxes you know? Okay, income tax. Next. Wealth tax. Okay. Property tax. Good. Road tax. Good.
GST.
GST. Okay. Next. Transport tax. Customs. Okay, good. Online people, you also can tell. SGST. GST is there. Service tax, have you heard of? Service tax is there. Okay. Income, wealth, property, road, GST is there. Excise. Income tax, you have two, personal and corporate. Have you heard of capital gains tax? Yes. There's something called as capital gains tax. Short term, long term is also there. Capital gains tax. And then what else is there? There is octroi as well. Is also a type of tax. So I'll just simply tell, I am not going to do classification or anything. I'll just give you an idea what each of these taxes are, so that you will be learning in taxation chapter in detail. See, income tax, it is on our income. Okay, whatever income you are earning, on that there will be tax. For a firm, of course, they have income, they have revenue, at the same time they have to spend as well. Whatever is remaining will be the income of the firm, on that they are going to tax. That is corporate income tax. Wealth tax, what is this about? If your income reaches a particular level in a particular year, then it is considered to be wealth generation. On that there will be a tax. As of now, we don't have the wealth tax. Presently there is no wealth tax as such. It is included in your income tax itself. There is no separate wealth tax. Property tax, if you own the property of a particular size, on that you have to pay tax. Okay, in particular area, so especially in urban areas. In rural areas also you have to pay tax, but in urban areas it is on the higher side. Collection is also higher in the urban areas. So commercial property more tax, residential property less tax, property tax. Road tax, this whenever you buy the vehicle, then you have to pay the tax. Okay, for the usage of the roads. That is one reason. CGT is like you have some assets. Okay, CGT is capital gains tax. You have a capital. From the capital you are making a gain. What is a capital? Capital is an asset. From the asset, if you are making gains, on that you have to pay the tax. For example, you have some shares. Share is an asset or not? Bond you have. It's an asset or not? You have money in a account, where in your savings account itself. How much interest do you earn in a savings account? 2.5%. That's max, I guess. So you'll be earning 2.5% interest rate per year. So is it good to keep the money there, or is it a loss? It's pure loss. Why is it a pure loss? Inflation. Because of inflation. Inflation is 6%. You have kept it there. 2.5% you are earning. So basically you are making a loss of 3.5% every year. Okay. So you have kept the money there. From that also you are earning. Is it a capital gain or not? It is also a capital gain, right? So you have kept it in the savings account. Fixed deposit account, there also you make a gain. Interest you are going to earn. For that also, capital gains is there, right? So any interest you are earning will be considered as a gain itself. On that there will be tax. Now, say for example, if you get property from your father, okay, you get property from your father, mother side, somewhere you get the property, and once you get the property, are you supposed to pay tax? Did you make a capital gain? Ancestral property, no problem. You got the ancestral property, and if you are selling that ancestral property, then you have to pay capital gains tax. Understood? Just transfer of property from one person to another person ancestrally, no problem at all. But sale is happening, then capital gains. Done? Clear? So that is CGT. So capital gains, whatever asset you have, if you sell, if you make a gain from it, then yes. So you have a share which you bought for 100 rupees. Next year you sell it for 110 rupees. 10 rupees profit you made. On 10 rupees profit you are supposed to make what? Capital gains tax you have to pay. That's it. GST, it is goods and services tax. Just think about it this way. You have service tax, you have excise, and then what? That's it. Only two we wrote. Is there anything else? There is something called as sales tax as well. Okay. So basically, if you look at it, 1, 2, 3, 4. All these 4 taxes are imposed on a good itself. One item if I buy, one good if I buy, or one service if I buy, on good, what taxes are imposed? Custom, excise, sales is imposed. On a good. On a service, they used to impose only one tax. What is that tax called? Service tax. One tax only. Along with that, for some services, they used to put sales tax as well. Now, what happened is that the government decided, hey, this is all cumbersome. For every, good, I need to calculate excise tax is this much, sales tax is this. We'll remove it. We'll do one thing. Everything we will remove and we'll have a single tax called GST. But what they did, that's what was supposed to be done, but they kept customs out. Customs is not included, customs is still charged separately. So you have service, excise, sales on goods and services, a single tax that is imposed. Okay. Now does it mean these other taxes are not there? Say for example, I had product A, B, C, D, E. 5 products are there, good or a service. So for these 5 products, earlier how many taxes were being imposed? All those taxes. Say for example, A, B, C are goods. What taxes should I impose on these 3 goods? Customs if it is being imported or exported. Next, excise, sales. This is what I had to impose. For services, probably service tax and sales tax. This I used to impose. But now what we decided is A, B, C, D, E, all these 5 products, we are going to put it under GST. Put it under GST. Now no problem. But if I will not put it under GST. For example, petrol, diesel, I will not put it under GST. I will still collect what taxes? Excise I will collect just like I used to collect earlier. Sales tax I am going to collect just like I used to collect earlier. So some of the products have been kept outside GST. So because of which the old taxes which are there still continue. The products that have been put under GST, for them excise and all is not applied. That is a single tax. For TV you have GST. For petrol you have excise sales. That's it. So this is the way you are supposed to look at it. Now, what about octroi? What about octroi? What is this? Now first of all, customs is for export import. Service we know, any service provided, on that there is a tax, service tax. Excise is for, what is excise for? For production, for manufacturing. Anything that gets produced in India, anything that gets manufactured in India, that has to be taxed just because of production. Right? Sir, why should you tax on production? Because resources are being used. Right? So you are using the resources of the system or the society. That is why you have to pay some tax. That tax is excise. So excise is not only on liquor. Why do they say excise department? They call it excise department because liquor production has highest tax, highest excise duty. That is why it is famously excise tax, excise duty for them. Right? Excise department they call it. And when they equate it to liquor, just because of this only, very high excise duty. Okay. Octroi, what is octroi? If goods are moving from one place to another, in between you will have one city. This city will say, you are using our infrastructures, you are using our roads, pay tax and then go. That tax is known as octroi. Right? For transit purposes, if tax is being imposed, then we call it as octroi. Clear? Done? Okay. So this is how taxes are imposed for different purposes. You will be learning in detail how each of them work in your taxation chapter. Now, excise cut you understood? On manufacturing you have to cut. Custom cuts, any imports that are being done, especially related to raw materials or some capital goods, machinery goods, you cut, then automatically the cost of production will reduce. So the prices will go down. So here GST, custom cut, GST cut, all of it you can put. Okay, next. Technology upgradation. Most of the times cost is higher because you are using inefficient technology. That is why the cost of production is higher. If you use highly efficient, innovative technology, the cost of production will be lower. So the cost of goods also will come down. Right? Inflation can go down that way as well. Next. Rational income policy or a wage policy. Rational income or wage policy. What can be done here is set industry standards for wages. Industry standards for wages, that is, this job, this much wage, not beyond that. Getting my point? You are doing this type of work, this much effort is involved, this much is the wage. This is the salary, not beyond that. And also you have to put a control on trade union. The trade unions, employee unions, they demand more wages. Both these are going to put a lid on what type of inflation? Wage price spiral, right? Built-in inflation. One of the causes for the built-in inflation is what? The main causes. The employee is asking for more wages. When this is fixed, this is a standard, not beyond this. You are a software developer, this is the maximum, not beyond this. If you switch the job also, this is the maximum. Industry standard, rational wage policy. Clear? When you have such policies and when you have control on the protests done by trade unions or employee unions, things will be under control. Then the prices will not shoot up all of a sudden. Further, price control mechanisms. Price control mechanisms. One of the famous things is APM, administered price mechanisms. APM, administered price mechanism. PDS also is one more. Public distribution system, through which buffer stocks are released. Buffer stocks are released. What is administered price mechanism? And what is this PDS and buffer stock? In simple terms, I'll tell you, you will revisit these things later. First is administered price mechanism, APM. A particular product, let's say diesel, an oil marketing company, the company which sells you HP, BP, whatever you have, Indian Oil, they are supposed to sell it at probably rupees 110. Why? One, there is cost of production, there is cost of procurement at the price at which it is going to get. Maybe it is getting at 50 rupees, 25 rupees all taxes from the central government, 25 rupees all taxes from the state government, right? And profit margin 10 rupees. Out of these 10 rupees, 7 rupees, who is going to take? Oil market company will take, Indian Oil will take 3 rupees commission given to petrol pump. This much. Clear? It is supposed to sell at how much? 110 rupees. Now the government comes in between and tells, do one thing, you sell it at rupees 100. 10 rupees I will give, or 5 rupees I will give, 5 rupees, don't worry. Getting my point? What is government doing here? It is administering the prices. It is saying, at this price you have to sell. Clear? Now, this is administered price mechanism. This is there for diesel. Earlier it was there for petrol. They have removed it. Kerosene it is there still to some extent. LPG it is there. For these products there is administered price mechanism. For diesel also almost it is gone only for now. Actually, if you let the markets decide the price for both petrol and diesel, actually diesel price should be higher than petrol, right? But because diesel is used by most of the people for certain categories of people for, let's say, transportation and in farms for agriculture, the prices are relatively kept lower. Okay, fine. This is administered price mechanism where the government comes in between and administers the price. The next one is PDS, right? So through PDS, what is the government doing? What is this system? Public distribution system. Say, the aim of PDS is food security. The aim of PDS is food security. For everyone, food should be available in our country. When we say food, what is food? Mainly food grains. Wheat, rice should be available for everyone. This is the idea. So if food is supposed to be available, how is this system working? You have a farmer. From the farmer, someone buys. Who is that? Government buys. When I say government, Food Corporation of India buys. It purchases and it is going to store in the warehouse. Warehouses it is going to store. From here, it is going to supply to all across the country, various parts of the country, which are called as fair price shops, ration shops. And in the ration shops, the government purchased from the farmer at rupees 30 per kg. This is the minimum price which was made as a promise by the government. Government made a promise, no matter what, I'll buy it at 30 rupees. No matter how much stock is there and how much supply is there in the market, I'll buy it. That is why it is called as what? Minimum support price, MSP. If there is too much rice in the market also, government will buy. FCI will buy. Now it purchased wheat, rice, it purchased at 30 rupees. It brought it to the warehouse and it decided, okay, I'll give it to the fair price shops. And in the fair price shops, at what price is it being sold? 0 or rupees 1 or rupees 2 per kilo. Rupees 5 maybe sometimes for APL families, or rupees 10 or 20 maybe for APL families. Yes, but at 30 it is bought, but it is sold at a lower price only. Now from here to here, just think about the cost. Transportation is there from here to here. Storage is there. From here to here again transportation is there. This is the total economic cost of food grains. And how many people are getting here from fair price shops? 80 crore people through this mechanism. Out of how many? Out of 140 crore. Done. Now here it is what? MSP. It has been kept in the warehouse. Now the question is, what if there are other people also? There are how many other people? There are another 60 crore people, 70 crore people. who buy it from the market only. When they go to buy in the market, usually they were getting the rice or wheat at rupees 50. All of a sudden, the price went up to rupees 70. For other people also it is becoming difficult. The prices have increased. What to do now? What to do now? Is there anything that the government can do? One of the things government can do is, it has rice and wheat in the warehouses. It is going to release this into the market, open market. Every year, your government is not going to procure only that much which it can sell in fair price shops. Obviously, it has to purchase more only. And extra that is purchasing, so that food security is there for sure in the country, is called as buffer stock. We have extra stock all the time. It's a buffer. If something goes wrong, somewhere there is a calamity or some other reason, this year the crop is lesser, for some reason we have kept extra. Extra buffer stock it has kept. No. The moment prices rise in the market for other people, what is it going to do? From the buffer stock, it is going to make a sale in the open market. At what price? It is going to sell in the market at rupees 45. Now automatically these prices will cool down or not? Done? Clear? Yes? What is the government doing here? It is doing a sort of a what? Administration itself. Administrative price control. It is doing a price control itself. Just like APM, it is doing a price control. This is also a price control mechanism. Did you understand? Yes? Okay. Next. Next. So we understood the cost side, we understood the supply side measures that can be undertaken. Both these measures, when you looked at it, who is supposed to take all these measures? The government itself. Both these put together, we can say these are fiscal side measures. What are these measures? Fiscal side measures. Government side measures means fiscal side measures. Now we have what can be done by the RBI. These are called as monetary side measures. So one is supply side, one is cost side, mostly done by the government itself. Yes, we call them as fiscal side measures. There are more fiscal side measures, but we'll look at monetary side measures first. Clear differentiation is what? Supply side, then cost side, monetary side measures, and then again fiscal side measures are there. Here mostly it is also fiscal side measures itself. So there are other fiscal side measures as well. We'll look at it in a bit once monetary side measures are done. So monetary side measures. I'll not give you the technical definitions now. I'll just explain it to you in very simple terms. Certain concepts related to monetary policy. Okay, to explain monetary side measures, I have to explain this. Exact meanings you'll learn later. Okay, for now, simple things. We have a RBI, we have bank. Okay, we have some banks. Where does the bank get the money from? We give. From people, banks got the money. Let's say people put 1000 rupees there. Correct? And bank will pay interest or not? It has to pay interest. Now, what is the work of a bank? What is the work of a bank? It is a business, no? Bank is a business. So it took money. What is this money known as? Deposits. What kind of deposits? One is CASA type, current account, saving account. These are known as demand deposits. On demand, the bank has to give back the money. And the other one is FDRD. Fixed deposits, recurring deposits. Here, these are also called term deposits or time deposits. Which means if you deposit the money, you are telling the bank that I am not going to take this back for 5 years. Fixed. So lump sum if you give and tell 5 years I will not take, 5 years you keep paying me interest, then it is fixed deposit. On the other hand, if you tell every month or every 3 months once, 5 months once, I will keep on putting 5,000 rupees into the bank account, but whatever money I am putting, I am not going to withdraw for next 5 years. Then what is it called as? Recurring deposit. Because it is tenure based, it is also called term deposits. Now you tell me, which money is going to stay with the bank for longer? There is a guarantee here. That is why bank will pay more interest for this one or this one? This one. Amongst these, more interest for FD, somewhat lesser for RD, and much lesser for savings account. No for current account. For current account, no interest. Current transactions. So basically businesses. So on a daily basis, money comes in and before the bank thinks money is there, you have paid it already. Correct. So people have put money, demand deposits, term deposits, they have put the money. And on most of them, they are getting interest. Where will the bank earn the money from? Where will the bank earn the money from? So 1,000 rupees came in. What will the bank do? It will give loans. Then it will buy some gold. Yes. Loans. Does it give all 1,000 rupees as loans? Is it good to give all 1,000 rupees as loans? It will earn interest. See, it will earn interest by giving loans. But the problem with that approach is you have to find good customers also. Yes, what if the bank gives loans to everybody in the street? I opened the bank in this road. Anybody come here and take loan. If that happens, there will be defaulters. They take the loan, they run away. So select people only can be given loans after doing proper KYC, meeting KYC norms, right? So based on your credit score, loan will be given. Now let's say out of 1,000 rupees that has come in, the bank gave somewhere around 400 rupees worth of loans. Gold also it purchased. Why? Because if it only gives loans and earns interest and keeps 600 rupees in its account, it is not going to earn anything. So it is going to make investment in gold for rupees 200. It's an asset for it. From this also it is not going to earn, only the valuation keeps increasing. Now still 400 rupees is left. What will it do? It has to earn from somewhere. It has to earn from somewhere. Now where will it earn from? It has to invest somewhere. It has to still invest somewhere so that it can earn some return. Done? Clear? This is what a bank is supposed to do. But whose money is this? People's money. Done? It is people's money. What if someday the bank thought, I'll give 1,000 rupees loan to people only. I want to make more interest. most profitable is this only for the bank. This is the most profitable one. Now, if it does so, and most of the people start defaulting, the bank will go into loss. Public's money is gone. Yes, public's money is gone. Because of this, RBI, which is the bank of banks, it is the apex bank. It is a bank of banks, apex bank. It is the regulator of all the banks in India. What it says is that do one thing, do whatever you want, okay, but make sure at least 20% of whatever you are receiving, 20% whatever you are getting, 20%, 22%, this number varies, 20 to 22% of whatever you are getting, keep it aside, fixed in a particular form. What form? I am telling you, 1000 rupees you are getting, no? 20% of 1000? 200 rupees. Out of 200 rupees, what is 6%? 6% would be, or rather I would say 4%, let's say 4%. 4% would be 8, correct? 80, right? 80 rupees you keep it as cash only. 80 rupees you keep it as cash only. And remaining 120, yeah? Yes? 120, 140 rupees, 160 rupees, whatever. You keep it as, let's make it 160 rupees. 160 rupees. You keep it as what? What should you keep it as? Either keep it as cash, gold, or cash, gold, or invest in a place I tell you to invest. Where will the government tell you to invest? Invest in government bonds. From there you are going to earn interest. It is not a loss for you. You will earn interest from there. But it is safe. That investment is very, very safe. You invest there. Now we will call them as GAS. Government approved securities. Okay. Government approved securities. So cash will keep it at 40. So that there is no confusion. This at 160. Let it be there. So this is 4%. This is 16%. 4% and 16%. So you can keep this 160 in cash, gold, or gas. Now how much am I left with? That is fixed. No matter what, you should keep it. How much is left with me? 200 is gone here. 600, 800 is gone. Still 200 is remaining. What should I do with this 200? If I keep cash only, is it a loss for me or not? It is a loss for me. What should I do now? What should I do now? What will I do? Loans also I have given. I can't go to people and say somebody is not good enough, right? You know that that person will not pay. Still, hey, let the risk be there. You take it because I have extra money. Will you do that? If I keep also, it is a loss. So what to do? I have to invest somewhere. I have to invest somewhere. Where will I invest? Banks are not allowed to invest in stocks, remember. Yes? That is why bank will buy extra gas. What is gas? Government approved securities, basically bonds. It is going to buy extra bonds. Now you might think, sir, is there so much gas? There is so much gas. Why? Government is net borrower or net lender? Net borrower. Any time it wants money. Okay. So how much ever you are ready to give to the government, it is ready to take. Yes. So it buys extra gas. This is the bank's side. Now you have invested the money in gas. What is a bond? What is a bond? Bond is like, I am giving you money. After 1 year, you return the money to me. Till that, you have to pay interest. 5 years later, you return the money. Till that, you pay interest. This is there. Gold is there. Loans are there. Whenever you need, will you get this money back? No. Only interest you will be getting. Gold, whenever you want to sell, can you sell? Yes, you can sell. What about this one? Can you sell whenever you want? Until and unless someone else is ready to buy. Yes, someone else is ready to buy. Yes. So this also you can't sell so easily. So we are not talking about 1 gram, 2 gram. So bank cannot go and say 2 gram I am selling, buy it. That is not possible. So it's like an asset, it has kept. Suddenly it can't, only for 2 days the bank needs money. There's no point selling this. Is there a point in selling this also? No point. Only 2 days, 3 days, 10 days it wants money. After that money will come. Others will deposit. We can manage. Now 5 days, 10 days if I need money, why will the bank need money for 5 days, 10 days? Because everything is balanced now. Some big customer will come. Come and tell, very good credentials. Ask the bank, hey, give me 100 rupees loan. Does the bank presently have the money? Everything is fixed here and there. It wants to give 100 rupees loan. Where will it get the 100 rupees loan from? Now it will go to RBI and ask, give me 100 rupees loan. RBI is like, you are a good bank? No worries. You have maintained this thing as well? No worries. I will give you 100 rupees. You want to run business? I will give you 100 rupees. But I am not going to give you the 100 rupees just like that. I will charge you interest. That is there. But if you go to the bank and just tell, I will pay you interest, give me loan. Will they give?
Security.
They want some security. Okay, pledge. You have to pledge something. Now RBI says, do one thing, pledge something. I will accept only gas as pledge. Do you have the gas? Yes sir, I have the gas. How much gas do I have? Extra gas, how much is there? See, 200 is gone here, 400, 800. 200 is there. 200 rupees worth of 300, huh?
No sir, they are 160, here are 200. Yes.
160 plus 40.
Yes.
200 is gone. 200 plus 200, 400. 400 plus 400, 800 is gone. How much is left? 200, no?
200. Sorry.
There it is 200. Okay. 200 rupees extra gas is there. Now I want 100 rupees. Fine. You do one thing. 100 rupees worth of gas you give. I'll give you 100 rupees. It is pledging. The day you return this 100 rupees, I'll give you your gas back. Understanding? Easy? Yes? Now, I have given you 100, but interest also I have to charge, no? 100 plus some interest rate I am going to charge. This is the mechanism. Understood the mechanism? Clear? Now, this person you gave loan, you sent him. Next person came. He also came and told you, I also want maybe somewhere around what? 120 rupees loan. How much do you have? Gas? 100 is already gone. How much is left?
100.
Only 100 is left. Only 100 is left. But this customer who has come, who is a much better customer, premium customer, asking for 110 rupees loan. How much do you have? 100 only. Can you give the loan? You say, sir, only 100. He will say, what kind of a bank is this? I will not take the loan from you. I am asking for 110. Can you give 110? Now you say, sir, yes, I'll give. You go to RBI, ask for 110. RBI is like, get lost. I can give you only 100. But RBI will check your credentials. It will check your credentials and tell, you are a very good bank. Fine, you have to do very good business. Good. Do one thing. This you give to me. 100 I will give. 100 is sorted. 10 more you want. Do one thing. I will give you a provision. Under this provision, this fixed is there, no? This is supposed to be fixed. From this also, you can withdraw some, take out some gas, fixed gas, and pledge it to me. Not entire. only up to 1%. 1% of 1000 is how much? 1% of 1000? 10. 10 rupees worth of gas you can take out from this, give it to me, I will give you 10 more rupees. Clear? But here I was charging interest rate for extra gas. How much? I was charging you 6%. But for this, because you took out from what is fixed, I am going to charge you 6.5%. Clear? Yes? No? Is it all clear? Now we will give names for everything.
Premium customer will also be charged more.
No. Premium customer will be charged lesser.
Like if the RBI increases the rate, doesn't it change from the bank to the customer?
See, RBI is not increasing the rate. This is a fixed rate. See, 6% is for this one. For any transaction of this nature, RBI has already decided this is going to be my rate. Okay. Now, what will the banks do? Banks, what they generally do is they will be charging higher for every customer.
Usually they don't charge. Like
Yes, for a premium customer they don't charge higher. For every other customer they will be charging higher only. So that will be matched. No worries. This much you have understood. Now shall we give names? Very simple. This fixed amount which we kept as cash is called as cash reserve ratio, CRR, which banks have to maintain as cash all the time. It's called CRR. Very simple. This fixed amount which is supposed to maintain as what? Cash, gold, gas. SLR, statutory liquidity ratio. Done. Extra gas, if you give, I will give you the money and I will charge you interest rate. This interest rate is known as repo rate. What is this known as? Repo rate. So the rate at which RBI lends to the banks by taking that extra gas is repo rate. And after you have completed your extra gas, still if you want to take the money from RBI, you can take out some of the gas from SLR, pledge it and take it at a particular interest rate which is higher than repo. This interest rate is known as marginal standing facility. Marginal standing facility. Understood? This is a facility given to you. Facility given to the banks. Understood this one? Any doubt you have anywhere? No? Now you tell me, if RBI reduces this interest rate, will banks be happy to borrow more or not? Banks will be happy to borrow more and will be willing to give more loans. If RBI reduces this, which means more cash in the hands of the bank to give more loans, it need not keep it aside, no? So more money. Reduces this, then also more money. Why? Because see, instead of maintaining 20% as reserve, now you are going to maintain what? Maybe 18% as reserve. 2% extra the bank has now. So it can give more loans. If you reduce the interest rate, if you reduce CRR, SLR, bank has extra money. Easy money it has. If it has easy money, it can give the loans more easily. Low interest rates. What is this policy? Easy money policy. Low interest rate, low SLR, lowered CRR. Good. More money supply in the system or less money supply in the system? More money supply. Higher money supply. When there is higher money supply, you tell me, people will have more money in the hands. Inflation will be higher or lesser? High inflation. So how to control inflation now? How to control inflation now? What should RBI do? Increase this, increase this, increase this. Done. I think we have covered almost 30% of monetary policy chapter. Almost 30% of the chapter is only done. Clear? Yes, sir. CRR, cash reserve ratio. SLR, statutory liquidity ratio. What is liquidity and all you will learn later. MSF, marginal standing facility. Marginal standing facility. Done. So there are many other things which RBI does. Okay, there is standing deposit facility, there is bank rate, okay, there is credit rationing, many other things are there. You will be learning in the tools of monetary policy. Everything is to control inflation only. So these are the main things.
You told when RBI reduces the interest rate, even banks reduces the interest.
Yes.
Does it happen?
Not always, not always. Okay, but now it is more or less happening. Okay, it is called as transmission of monetary policy. Earlier it was not happening properly, now it is happening. Okay, so earlier the issue was, how should banks decide interest rate? It was completely left to the banks. Later on, they brought in something called as benchmark lending. And then, they have made something called as external benchmarking. And now you have something called as marginal cost of funds based lending rate, MCLR. So there are many things. How banks decide interest rates now is different. Okay, you will be learning in the monetary policy chapter, banking, money, there. For now, this much. So coming to our monetary policy measure, monetary side. What should the bank be? What should the RBI do? Increase repo rate, that is interest rate. Increase CRR. Increase SLR. So automatically when you increase repo, it is always linked to MSF. MSF will also increase. Marginal standing facility rate also. Interest rate for that also will increase. Okay. So whenever repo increases, MSF also increases. There is a fascinating thing here. Fascinating thing. This concept is more or less key. I'll come to that slide, don't worry. More or less the key. What I am going to tell you. RBI gave money to whom? Bank. This is understandable. At what interest rate? Interest rate is known as repo rate. No problem. So repo full form is repurchase rate. Okay. So I will repurchase whatever you have given to me. So that is why it is repurchase rate. What if RBI borrows from the bank? Is it possible? Is it possible? Why does it borrow? Does RBI need money? It does not need money. So, what is it then? So basically what happens is, RBI wants to control how much money is there in the market. How much money is in the hands of the people. One way to control it is what? If RBI increases the interest rate, loan rates will go up, right? Loan interest rate goes up. That is why people will not borrow much. If RBI increases SLR, CRR, banks have to keep that money aside, so they don't have extra money to lend. That is why, not much money supply in the market. There is one more way. bank has some extra money, right? It was thinking of giving the loan, right? Extra money it has, it was thinking of giving the loan. What RBI does is, I will give you interest rate. So far it was telling, I'll give you 6% interest return. If you give me money, I'll give you 6%. Now RBI will say, instead of 6%, I'll give you 6.5%. What was 6%? It made 6.5%. Done? What was 6.5% here? It made 7%. Both of them increased or not? Both increased. Because of increasing like this, what will happen? Less money with the banks. It is banks are borrowing lesser. Whatever extra money the bank has, it was thinking of giving us loan. Now it will decide, hey, I was getting 6% if I kept with RBI. Now I will get 6.5%. Instead of giving loan to these people and them not paying back, better I will put the money with RBI only. Agreed or not? Yes or no? In both the cases, money supply reduces or increases?
Reduces.
In both the cases, the money supply reduces. Here also, what is this called? Repo rate was increased or decreased? Repo increased. Here interest rate was increased or decreased? Here also increased. What is this called? Reverse repo rate. Did we increase or decrease? Here also we increased. Very, very important. Repo increase means money supply will reduce. Reverse repo increase means also the money supply will increase. Money supply will decrease, sorry. In both cases, money supply will decrease. Here because of high interest rate, people will not take loan. Here because of high interest rate, bank will give money to RBI instead of people. That's all. Clear? Yes? Okay. Now come back to this. Increase reverse repo. Correct? Increase the reverse repo as well. All of it leads to low money supply. Lower money supply. If low money supply, controlled inflation. Done? Okay. Many other things related to monetary policy you will be learning in the monetary policy chapter itself. For now, we'll move to the next part. Fiscal measures, other fiscal measures. So, fiscal measures we saw supply side, cost side. Now, other fiscal measures. So, they can be clearly said to be supply side and cost side. These cannot be supply side, cost side. These are completely related to government. So, fiscal side measures, other fiscal side measures, what can be done? One is austerity. One is austerity. Austerity. What are austerity measures? Unnecessary spending is cut by the government. Profligate spending is cut. Profligate spending, too much spending, lavish spending by the government is cut. Like what? It's not a lavish spending. So what is a profligate spending? It's like government used to do meetings in 5-star hotels. Now it is going to do meetings in tea stall. And then you have 5 ministers used to go to foreign for a small meeting. Now only one minister will go, and in economy class, not business class. because of which government expenditure reduces. Understood? So if the government reduces the expenditure, less money in the market. The money will stay back with the government only. Yes? Next. Direct taxes. Which one? No, these are all measures. See. So recently also, recently it is in news, no? This one is in news. So because inflation is going up, right? Too much inflation in certain commodities, certain goods and services, the government, the Prime Minister made a request. Everybody in the government should be using less of vehicles and everything. So what people were doing, what most of the people were doing, they use cycle, right, for one day, photo op, next day same thing. Yes. The thing is, most of the times the gravity of the situation is not understood. When you look at the macro numbers, then only you understand the gravity. For example, we were speaking the other day. We had reserves worth which can feed us for 11 months rather than feed us, which can manage our import bill for 11 months. Now it has come down to 6 months. When it comes down to 3, still we will not realize. When it comes down to 1 month, maybe we'll start thinking. The day probably it almost stops. That's when we are going to realize, no, now we have to do something. But that will be too late. So that is what a crisis is. That is what a crisis is. Okay. Secondly, direct and indirect taxes. Direct taxes. Should we increase or should we decrease? Yes? Increase or decrease? More money in the hands of the people. So if we increase the direct tax, what will happen? People will have less money in the hands, less demand. Correct? Indirect taxes. Depends, increase or decrease, it depends. So usually if the prices are high for the goods and services, we generally decrease the indirect taxes. What will happen with this? The price of the product will go down in the market itself. On the other hand, if people don't have money, right, then what we are supposed to do? Then we are supposed to reduce the indirect taxes. Can we increase the indirect taxes as well? When people have too much money in their hands, then we can increase the indirect taxes, but that does not serve any purpose. So better way is increase the direct taxes, reduce the indirect. What are direct taxes? What are indirect taxes? Direct taxes are on our income. Indirect taxes are on products. Direct taxes are on you. The tax which you pay directly from yourself to the government. Direct. Indirect taxes, you don't pay this tax to the government. You pay to the shopkeeper, shopkeeper pays it to the government. That is why it is indirect. Right? Two concepts for whether it is direct or indirect. We have impact of tax, incidence of tax. You are going to learn about it in taxation chapter. Impact and incidence. Why we are supposed to? So the cost of the product presently is rupees 110, no? Petrol 110. Why is it 110? 50 rupees is the cost. 25 rupees state government, 25 rupees central government, 10 rupees profit margins. What are these two taxes? Direct taxes, indirect taxes? Indirect taxes. Should I reduce or increase? reduce. If I reduce the indirect taxes, the price of the product will go down. Yes, inflation lower. This is used when people have more money in their hands. See, remember, all the measures that we are talking about, you can't use all of them all the time. We have to use a combination of measures based on what is causing the inflation. We have listed so many measures. We have to first diagnose. You have fever. Which tablet to take? Every time paracetamol you will take? Every time you will take paracetamol only. Along with that, you have to check whether it is viral fever or whether it is bacterial infection. Accordingly, you have to change the medication as well. Along with paracetamol, you have to take something else. Understood? Is it seasonal flu which is causing? Then different. Same way here. Based on the diagnosis, we are going to use the measure. We have a list of measures. Out of these measures, we have to select based on what the actual problem is. Done? Okay, fine. Next. Yes.
Based on the sectors, the price bracket, like the income tax bracket, where it is like directly proportional to net tax, or does it differ for everybody?
What?
Like you said, the
Income tax, huh?
Yeah.
Income tax is same for every sector. It is the same for every sector. It is based on your income, no matter which sector you work for. Right? Say for example, there is a person who has a tailor shop. Okay. Another person goes to IT firm. Okay. So tailoring he does and earns, let's say 3 lakh rupees per month. And on the other hand, you go to the IT firm, you are also earning 3 lakh rupees. How much income tax should you be paying and should that person be paying? Same. But what is the problem? Will that person pay for 3 lakh rupees? No. Why? Because it is not registered. The government does not get to know how much that person is actually earning. This is the problem. Right? The problem is not that they are taxed differently. The problem is disclosure. The problem is disclosure. The problem is being unorganized. That is the problem. Yes? Okay. Next. How to measure inflation? Measuring inflation. So maybe we will end the class early. Depends if we are able to complete this topic. It completely depends on whether measuring inflation gets over today or not. So if it is 5 o'clock, 4:30 we will go, 4:15 we will go after this topic. If it is 5 o'clock, then we will go. If it is 5:30 also, it is fine. We'll complete this topic. So it depends. So what do you wish for? Do you want it to be 5:30, 5, 4:15? What is it? 4:15. Always want the error to be on the negative side when it comes to time. Okay. The first thing that we need to understand is what is known as price index. What is a price index? So what is a price index? It is a specialized average. Price index is a specialized average designed to measure, specialized average designed to measure relative change in price over time. Okay. relative change in price over a period of time. The formula is very simple. Price index is equal to current year price divided by base year price into 100. Current year price divided by base year price into 100. Say for example, the price of a basket of goods we take. For the basket of goods, the price this year, say 1 kg apple, 1 kg orange, 1 kg papaya, everything we have put in the basket, and the price of it is 100 rupees or 110 rupees this year. Base year we have to select. We know how to select a base year. Yes. So we selected a base year. In that year also we go back and same basket, how much is the price? How much will it be? Shall we keep it as 100? Yeah, we'll keep it as 100. Into 100. 110 is the, what is this? Price index. Now we'll see the years. So this is for 2026. This is 2024, let's say. 24 is the base year, let's say. Done. So middle we have what? 2025 as well. For 2025, what we will do is, we'll make it as 105. The same basket, it is 105. So what will we do now? 2025, how much is it? 105 rupees. Base year, same base year, no? 100 into 100. How much is the price index now? 105. The price index for 2025 is 105. The price index for 2026 is 110. Clear? Done. Now, how much is the inflation? Rate of inflation is equal to price index of this year, or rather price index of year X minus price index of year X minus 1 divided by price index of X minus 1 into 100. Now, for which year do I want rate of inflation? I want it for 2026. What will I do? For 2026, what is the price index? 110. X minus 1 is? So X is 2026. What is X minus 1? 2025. How much is it? X minus 1 is how much? 2025, which means how much is it? 5 by 105 into 100. 5 by 105 into 100. How much is it? 1.06. 5 divided by 105 into 100. 4. This is the inflation rate. That's all. This is the inflation rate. Did you understand the calculation? Did you understand? All I have to do is first price index, a basket of goods, how much does it cost this year? How much did it cost in the base year? Into 100. For every year I will calculate price index. After that I will substitute in this formula. Clear? Yes? We got it like this. Now, what is the rate of inflation for 2025? How much is it? How do I calculate? 105 minus 100 divided by 100 into 100. How much is it? It is 5%. That's all. Very simple. Done. They will not ask you calculation, but in order to have the conceptual clarity, this is required. Okay. By this measure, any year I take as base year. Any year I take as base year. What will be its price index be? Think about it. 2024 is the base year. Correct? Let's say the basket of goods cost in that year as 216 rupees. The basket of goods is what? 216 rupees. How do I calculate the price index? PI is equal to current year price how much? Base year price is how much? How much is it? Invariably, the base year's price index will always be 100. Correct? Any base year you take, that year's price index will be 100. Why? Because current year's price divided by base year price is the same. That is why we will get 100 as what? The price index for the base year. Remember this, an important point. Done. So instead of 100, we took it as earlier we had calculated it for 100. Even if it is 216, 2000, 10,000, 10,500, whatever number, it will be the same number above and below. So we are going to get price index as 100. So we will take it forward a bit. What was 216 in 2024? In 2025, how much will we do it? We will make it 224. Random number. 224 will do it. Now what am I supposed to do? The price index for 2025. How will I calculate? What is the current year price? 224 divided by 216. How much is it? Fast. How much is it? 103.7. This is the price index for which year? 25. How much is the inflation rate in 25? Inflation rate 2025. How do I calculate? 103.7 minus 100 divided by 100 into 100. How much is the inflation rate? This is the inflation rate. That's it. Can we take it a step further? From 224 into 2026, how much has it become? Let's say 236. Now what will I do? How much is the price index for 2026? 236 divided by base year. 216. How much is it? 236 divided by 216. 109 is it? 109.25. Now how will I calculate the interest, your rate of inflation for inflation rate for which year? 2026. How will I calculate? For 2026, what is the price index? 109.25. For 2025, how much is it? 103.7 divided by how much? 103.7 into 100. How much is it? Tell me now. How much is it? So 109 minus 103. How much is it? Do it fast. Correct number I need. 109.25 minus 103.7 divided by 103.7. You did it? 5.35% is the inflation rate. That's how we do it. Clear? Yes. If you understand the concepts, very simple. It makes a lot of sense. It makes a lot of sense. Now, any inflation number we talk about, this is another key, concept. Any inflation number we talk about, it is always point to point. We always do point to point calculation and point to point comparison as well. What is this point to point? Say, in 2026, if inflation rate is 6%, what do I mean? What do I mean? 2026, 6% inflation rate. What do I mean? It means compared to 2025, the prices have increased by 6%. Done? There's no problem here. If I say in the month of February, there is inflation rate of 8%. What do I mean? %8 increase from where? This is February 2026. Compared to Jan 2026, 8% increase? Compared to February last year, this year the prices have increased by 8%. That is why it is point to point. Clear? Yes? Understood? On the other hand, when they say GDP month-wise, they don't give. GDP, how do they give? Annually they give and quarterly they give. They give quarterly. When we say quarterly numbers, when they say Q2, 5% increase in GDP means what compared to Q1? Very, very important. It is not what? Point to point. This one is point to point. Now you might ask, sir, why point to point? Why not compared to last month only? That would have been easier, no? Why point to point? Anybody who can give a reason why point to point? I told you in the start of the class also, this is a subject which is based on logic.
Consumption of goods should be done for a longer period of time so that the inflation rate also increases.
Somebody said it. Who is it? It is because of?
In the middle there might be seasonal.
Yes, it is just because of seasons. Only because of seasons. Because of seasons, because of monsoons, for sure there are going to be price rises of certain products during monsoon, during summer. Say for example, ice cream prices or products related to ice cream prices will go up, or products related to summer will go up in summer or not. In winter they will drop. What is the point in comparing the product prices of summer with the winter prices? There is no point. It feels like the inflation has gone down too much, or inflation has gone up too much. So that is why point to point comparison makes more sense. Clear? So we have point to point comparison to factor in seasonal changes, seasonal consumption pattern change. That is why seasonal consumption pattern changes. That's what is factored in. I think you would be finding it difficult to write notes in my class. Yes? What I suggest to you is don't focus on definition, focus on understanding only. If you are able to understand everything, whatever you are able to understand, write the exact same things. Learn the exact same way. After that, you read any textbook, you will be able to understand. Any textbook. Okay? Fine. Now comes the next stuff. We learned price index. We learnt what rate of inflation. Then we learnt what else? This one, point to point calculation also we learnt. All we need to do now is price index. How did we calculate? We took a basket of goods. The same basket of goods we saw this year. What is the price? What is the price in base year? Whatever number we are going to learn now, I will just change the basket of goods. The calculation is same method. I'll just change the basket of goods. If the change in basket of goods and services is done, I'll get different what numbers? Inflation numbers or different methods of calculation of inflation. I just have to change what? Basket of goods. Done. When the basket of goods I am considering is related to consumers, people, normal people buy goods and services and they use them. And if I am considering only those goods and services which most of the people use, right, consumers, the number I am going to get is CPI, Consumer Price Index. The basket of goods and services considered here will be those goods and services which most of the people use. I am going to track the inflation of only those goods and services. The second set of goods and services which we are going to consider are the ones which are mostly related to manufacturing and wholesale level. And the index we are going to get WPI, Wholesale Price Index. But this WPI is not a good measure. Better to make a shift to the next better measure, which we call it as PPI, Producer Price Index. We will discuss that. And finally, here we have made a selection of goods and services which are important for consumers. Here also we have made a selection of goods and services which are important for what? At wholesale level. Here we don't make such distinction. We calculate the prices of goods and services for all the goods and services that are produced in the market overall. This basket, we call it as GDP deflator. GDP deflator. That gives us the inflation number of the whole economy, all goods and services which are produced in the economy. Not select a basket. Okay, we'll start from CPI. You tell me, what are the things that we need for survival for every person, irrespective of where the person lives, what the person does? There are certain things which are required, and we can categorize them under what categories? 6 broad categories. Broadly, 6 categories are there. F&B. What is F&B? Food and beverages. 2. Clothing and footwear. 3. Housing. Food, clothing and shelter is done. What else do you need? Anything else? Health and nutrition, we can put it under miscellaneous. Education, health, nutrition, miscellaneous. Anything else? Fuel and light is also required. Anything else? Which most of the people consume, which is important? Pan. It is true. Pan, tobacco and intoxicants. Okay, that is the sixth category. Pan, tobacco, wahi pan hai, the same pan. Pan, tobacco and intoxicants. These are the six broadest categories where majority of our spending goes. What kind of sections of people are we talking about? What kind of sections can we do? One kind of section we can look for is people in the rural areas, people in the urban areas, people combined or all India, both put together, average of both. Anything else? Agriculture labor, rural labor, industrial workers. These are the categories of people. Now, sir, why did we do these categories anyways? Accordingly, these are how many categories we have? 6. Accordingly, we have 6 CPI numbers. All 6 CPI numbers will have same categories. But what will the difference be? What will the difference be? Consumption patterns will be different. How the consumption pattern will be different? A rural person will be spending most of the money on these things, let's say. He will not be spending on housing. The weightage of housing in CPI rural will be negligible. Done. For an urban individual, housing is a big thing. Housing weightage will be more. Clear? For agriculture labor, most of the money goes into food and beverages and clothing and footwear and also pan, tobacco and intoxicants. Now you might ask, sir, industrial worker, urban people, are they not the same? Agriculture labor and rural, are they not the same? Are they same? Are they same? In urban, you have industrial workers plus who else? Self-employed people, corporate, all these are there. That is not included in industrial worker. In rural, agriculture labor, rural labor is there. Anything else? Farmers are there. Yes? Small businesses will be there. These are all not included. The coverage of rural and urban is much broader than agriculture labor, rural labor and industrial workers. What is the difference between these two? Sir, who are these people anyways? Agriculture labor, rural labor. Agriculture labor, rural labor are the same. Both are same. Then what is the difference? Agriculture labor, when they work in fields, the same people, when they don't have work, they will take up some other job in the rural areas. Some other work they will do. Then they become rural labor. So the consumption pattern of both agriculture labor and rural labor is same. While we get different numbers, but it is the same. Same but different. Okay, that is what happens there. Okay. Next. Now, so how many numbers do we get? 6 numbers. Based on consumption patterns, 6 different categories of people. Fine. What are the base years? We have to know the base years also. CPI rural, CPI urban, CPI combined. The base year is 2024. Earlier the base year was 2012. Now the base year is 2024. Remember why we use the base year? Why do we use the base year? To calculate what? We are in inflation chapter. To calculate what? Price index. To calculate the price index, we need the base year. CPI AL, RL and industrial workers. CPI industrial workers 2016. Agriculture labor, rural labor. Agriculture labor, rural labor. I want you to tell me tomorrow. Agriculture labor, rural labor. I want you to tell me tomorrow along with the reason as to why it is in that year. See, here it is 2016, here it is 2024. Here it is much lesser. It is less than 2016, let's say. Base year. Why? You find the year. At the same time, I also want you to tell me why it is left unchanged. Or even if we are making a change, only small changes. Why? I want you to find the reason and tell me tomorrow. Tomorrow you have my class? Yes, no? Yes, tomorrow you have to tell me. Okay, next. Who releases these numbers? So GDP numbers, who was releasing? Who was releasing the GDP numbers? NSO was releasing. Who will release these numbers then? There has to be someone who releases these numbers, right? Who releases? Same. NSO. Under whom? Ministry of Statistics and Program Implementation. Same people. But the last three numbers are not released by NSO. The last three numbers, AL, RL, IW, they are released by Labor Bureau. Labor Bureau under Ministry of Labor. You can't see the board? Can you see now? Next. Which is the next number? WPI. You have to learn about WPI. Now tell me, what is headline inflation? Headline inflation. Remember headline inflation? What is headline inflation? The inflation that comes in headlines. That is the definition. The inflation that comes in headlines. Which inflation comes in headlines? CPI. Which CPI? We have 6 numbers. All India. CPI combined. That is our headline inflation. Why does it come in the headlines? RBI always targets that number only. RBI's target is to keep that number between what range? 4 plus or minus 2. Keep that CPI all India between 4 plus or minus 2%. Which is 2 to 4. This is a target. So if it goes to 6.2%, what will RBI do? What will RBI do? Monetary side measures, control inflation. What to do? Reduce money supply. How to reduce money supply? Increase repo rate. Increase SLR maybe. Increase CRR maybe. Increase reverse repo rate. Or increase MSF, all these things it can do. But more often than not, it touches only these two actually. It touches only these two. Reverse repo rate, repo rate. Repo rate when it touches, always remember this. RR is called as policy rate. RR is called as policy rate. Why is it called the policy rate? RBI makes change only to policy rate. So, because I said it, I have to explain. Had I not said it, I need not explain. So, what is it? You have repo. This is known as policy rate. And above repo you have MSF or below repo you have MSF? Above repo, the interest rate on MSF is more, right? So if this is 6%, MSF rate will be 6.5% or 6% only? Okay. Plus something is your MSF. Correct? Plus something is MSF. Now, you tell me, if you are a money lender and you have a lot of money, yes, you lend at 8% or you lend at 10% and you don't want money, but somebody wants you to take money and give some interest. Will you pay 10% or will you pay 8%? You have already a lot of money. Forcefully they are giving you money. Will you pay 10% or will you pay 8%? You are like, I don't want, still give me, I will pay something. Correct? I will pay less only. Same thing with RBI also. Right? What will RBI do? Minus something. Repo minus something will be what? Maybe 5.5%. It will be my reverse repo rate. 6% will be this, 5.5% will be this, and maybe 6.5%. Clear? Yes? This bandwidth 6 plus 0.5, 6 minus 0.5 is known as policy corridor. Simple. What is it known as? Policy corridor. The operation of the policy rates will be in that corridor itself. Now, it can make this 6 plus 0.25, 6 minus 0.25 as well whenever it does the review. It can be 0.75 as well. Here 0.75, that side as well. Now, whenever it meets and makes a decision, it does not tell all the numbers. It only tells, I have changed this number. Which number? Repo. If I change repo, automatically what all will change? MSF will also change. Reverse repo will also change. That is why what is it called as? Policy rate. What is the policy rate? Repo is the policy rate. If RBI makes changes to it, automatically reverse repo will change, MSF will also change, SDF will also change. Done. Sir, will they not change this number at all? 0.25, 0.5, will they not change? It changes only rarely. Maybe 1.5 years once, 2 years once. If it thinks feasible, it changes. Done. Clear? Okay. Why did we come there anyways? For some reason we went there. Okay, because of this. Because of controlling the inflation. Done. Now we'll go to WPI. The beauty and the problem of this subject is, the beauty is that if you understand, you can make connections very easily. There is a beauty. Difficulty is also the same thing. There are too many connections. Almost every single chapter is connected to the other. What is WPI? Wholesale price index. A product starts from the production unit. From production, it goes to distribution, wholesale market, and then wholesale say retail market, and from the retailer it comes to the consumer. The price at which retailer is selling is the same price which the consumer is paying as well. The price at which the retailer is selling, at the same price consumer is buying also. Done. That is why your CPI is also known as it is also called as retail inflation. CPI is also called as retail inflation. At the retailer, what is the inflation? Done. If the price of some goods and services have increased, what are the two reasons? One of the reasons for the increase in the prices is people have demanded more. This is one reason. That is why the prices have increased. The other reason can be what? Cost has increased maybe. Cost has increased maybe. So the cost of production has increased. That is why the prices can increase. Or the demand has increased. That is why the prices have increased. Correct? To know whether it is because of demand the prices are increasing or because of the cost of production the prices are increasing, that is raw materials, cost of production means raw material cost maybe, wages maybe. What is causing the price increase? In order to know it, should I track the prices here or should I track the prices here? If I track the prices here it is rupees 100. Now it has become rupees 110. Here what was rupees 105 has become rupees 115. From here to here. From here to here it has become 105. From here to here it has become 150. Clear? Now 100 till here, how much is the addition? 5 rupees. Here to here, again 5 rupees. Now can I clearly tell? Nothing has changed in between. Only the input cost itself has caused my inflation. Can I tell that? Yes or no? The reason what 105 was has become 115 is not because of what? Transportation cost, not because of storage cost, not because of somebody eating profits in between. Nothing is the cause. None of it is the cause. What is the main cause? At production level itself the prices have increased. Agreed? Yes or no? Yes. Now what if instead of tracking the prices here, I come to the wholesale market and track the prices? Say by this time it has become rupees 103, rupees 107, 105, 110, 111, what is it? 111. Can I clearly tell whatever change has happened, the price increase here is because of cost of production or transportation cost, storage, profits? Can I clearly tell from here? Here I can't tell. But we are tracking the prices where? At the wholesale market. And this number that we get by tracking the prices at wholesale market is known as what? Wholesale price index. Now the question obviously is, sir, why are we not tracking here? We should be tracking here. Why are we not able to? Why are we not able to? I told you the other day. Many things that are sold in your what? Many things that are sold in your shops, small shops. Do you clearly know where they are being produced? But in the shop when they are sold, they are going to get a value or not? Is it all coming in the bill or not? All of it comes in the bill. Wholesale market, you have the bills for selling of chips, homemade chips and everything. Is it registered with the government? No. But in wholesale market, when the sale happens, is it registered? Yes. Many things that happen in MSME, especially micro and small and your village industries, it's not present here at all. We can't track it. But in wholesale market, we find all those products. That is why we track the prices where? Wholesale. At wholesale level. We can't find it in the production level because most of the firms are unregistered. Informal sector. But the moment they come into market, at wholesale level you can find most of the products. That is why we track the prices here. But it is not serving any purpose. Not a great deal of purpose it is serving. Diagnosis, do you remember? When I know whether it is here or here, diagnosis is very, very clear. I now know what to change. What policy measures I should take. I will be clearly knowing when I check the price levels here and price level here, compare. Diagnosis is clear. When I am checking here and here, diagnosis will not be clear. Yes, my diagnosis will not be clear. That is why my measures also will not be perfect. Where? No double counting. See, we are just comparing, no? In wholesale market, the price of chips is 8 rupees. We calculate WPI. In retail market, the price is 10. We calculate the CPI. We compare these two. Why there is a difference? We think the difference is because of production costs or because of demand. But that calculation is not absolutely right. Why? Because we are supposed to track the prices where? Here. At this level. But we are not able to track because of these things. Done? Now, what is WPI all about? What is there in WPI? What basket of goods and services are there? The first and the foremost thing is, in WPI basket, there are no services. Only goods. We don't track the prices of what? Services. In wholesale market, have you ever seen something being sold? Services like transport. 20 tickets at once you buy. For what? One person, 20 tickets. Do you want to buy? In bulk, to go to Tirupati, 20 tickets, one person. It does not work that way. Yes? So, wholesale market is for goods only. No services are included. And in goods, what are the goods which are sold in wholesale, which are very, very important? First is manufacturing goods. 2 is primary articles. 3 fuel and power. Okay. So the earlier base year for this was 2011-12. Earlier base year was 12. 2012 was the base year, just like CPI. The present base year, it is still in transition, 2023. The transition from 2011-12 to 22-23 was done by Professor Ramesh Chand. This person headed the working group, headed the group to make this change. A committee. Ramesh Chand. So he is a member of Niti Aayog. The group is also looking into making a shift from WPI to PPI, Producer Price Index. Making a shift from WPI to Producer Price Index. Why we can make a shift now from WPI to PPI? The reason is we have the GST. With the coming of GST, many firms have been registered now. Right? With the GST, many firms are registered now. Even the small firms, micro firms are also registered. Done. So PPI is the global standard. Okay. And PPI will always exclude taxes, trade margins. What are removed? So in your PPI, what are not there? No taxes at the producer level, no? Taxes are not yet imposed. No trade margins. What are trade margins? After the producer, whosoever are in the middle, they will sell at a margin, no? Those margins are also not there. And also there are no transportation costs. Transportation costs, logistics costs, all are removed. Whatever value you are getting at the producer level, it is the actual value of the good. These are all additions afterwards. Done. Now, just think about it. We'll add all these and take an example. For this, a good was produced at rupees 100 at the production facility. This much was the cost. How did this become 100? Raw material cost is there, labor cost is there, the producer wanted some profit, some rent was paid, and what else? Land, labor, capital, interest for investment. All these put together, rupees 100 rupees. Now after this, it was given to a distributor. To transport it to the distributor, from distributor to wholesaler, from wholesaler to consumer, transportation costs are always there. 10 rupees transportation cost. Plus trade margins, each level, they have added 1 rupee, 2 rupee, 3 rupees like this, 5 rupees trade margin. At what price is it being sold? How much? 115. This is at consumer level. From here to here, this is how it is. What are these numbers? And at the same time, tax also was imposed on this itself. Let's say somewhere around 10 rupee tax was imposed. Automatically it becomes 125. Are these the one which are adding value to the product? No. These are not the ones which are adding value to the product. Now all of a sudden, if this becomes rupees 150, is there inflation or not? What caused inflation? You tell me. If just it becomes 150, what caused inflation? We'll consider this part to be B. This part, all of this put together as A. Did A cause inflation or B cause inflation? Can you tell whether A caused inflation or B caused inflation? From 125 to 150, 25 rupees difference happened. What caused inflation? A or B? I don't know. It can be either this or this. I don't know. Correct. Now I'll have wholesaler where? Here. If I track the prices at wholesaler level for the same product, earlier it was, let's say, 120. Now it has become 140. Right? 120 became 125. 140 became 150. 5 rupees difference is there. 5 rupees difference between these two. So here it was 5 rupees difference, here it is 10 rupees difference. The inflation is 5 rupees. Why did this 5 rupees happen? Because the wholesaler has increased his margin. Transportation cost has increased. But what changed before that? I don't know. If I ask you whether it was transportation costs or input costs which actually increased the price to this level, 20 rupees, where did it come from? I really don't know. So that is why, where should I track the prices? Always. If I track the prices here, I will clearly know whether it is A causing the price rise or B causing the price rise. That is your diagnosis. Accordingly, we can take the measures. Clear? Done. This is your WPI. So the basket will have manufactured goods, primary articles, and fuel and power. Right. Next. Tomorrow I need you to tell me one more thing. What is the weightage of each of these items? Which are the items? Manufacturing, what is the weightage? Primary articles, what is the weightage? And also, what is the weightage of this? How many items total? 3 categories. How many items? And what is the weightage? And also I want you to tell me who releases this number. What is the base year? It was 2011-12. Now 22. I want you to tell these things. Tomorrow. You search, tell me. Weightage of these three categories. What is the weightage? Primary articles. Manufacturing, primary articles, fuel and power. These are the items which are sold in the wholesale market. Okay. The last number that we have. What is the last number that we have? GDP deflator. We'll have a discussion about WPI tomorrow. Don't worry, but you get me those things. GDP deflator. How do we calculate GDP deflator? Nominal GDP means GDP at current year prices. GDP at current prices divided by GDP at GDP in current year is nothing but nominal GDP. GDP at base year is if our nominal GDP is 1000 rupees, 1005, real GDP is 1000. How much is it? Or 1050, it is better. How much is it? 5% inflation. Overall, we have 5% inflation. GDP deflator shows 5%, which means in our entire economy, all the goods and services put together, how much is the inflation? 5%. WPI, what inflation is it tracking? Only the goods, select goods at wholesale level. CPI, what is it tracking? Only certain basket of goods which are used by consumers most regularly. Now, of all the three numbers, which is the best number according to you? Which is the best number? Why CPI? Because RBI uses it. See, we should be looking at the number which tracks everything. The best number, of course, is this. Which one? GDP deflator. But there is a problem with GDP deflator. What is the problem with GDP deflator? What is the problem? When do we get the correct GDP number? After how many years? After 2 years. So if I want to make a decision on inflation, whether to increase the interest rate, whether to reduce the tax, increase the tax, after how many days can I do properly? After 2 years. By that time inflation would have come, destroyed the economy and gone. So what should I do? I have to search for something less number of goods and services I should be able to track. Things that actually matter the most for people are the consumer goods. That is why we have created those baskets, which we can track. Very less number of items will be there, somewhere around let's say 600, 700 items. We can track them. In GDP, how many items will be there? Lakhs and lakhs together. Can we track the prices so regularly? That is a problem. While GDP deflator is a good number, it does not make sense. Why? Because the numbers come late. Sir, can we not get the numbers instantly? Maybe in the future. Presently not possible. This is the first problem. The second problem with your WPI. Why can't we use WPI? WPI, as I told you, it does not make sense again because it does not track the services at all. It tracks only goods. GDP deflator covers all goods and services both, but there is a problem with delay. CPI, what is the problem? Is there a problem with CPI? Limited it is. Very limited number of goods and services it tracks. Done. Each of the numbers have their own pitfalls. But for consumers, the best number to track is CPI. And at the end of the day, inflation matters the most to people. So that is why tracking at consumer level itself is better, and that is selected as the headline inflation, not the GDP deflator. Clear? Done. Done for today. Tomorrow we will take up WPI, we will discuss in detail WPI, and also GDP deflator, we'll write some comparisons between the two, and then we are going to go to what? We are going to go to 2 more things, 2 to 3 things. 2-3 things we are going to discuss tomorrow related to inflation itself. One is going to be your what? WPI details. Second, we are going to also discuss index of industrial production. Do you remember? We spoke about index of industrial production. Then we are talking about annual survey of industries. And then we are going to talk about one more thing, business cycle, inflation targeting. This is one more thing. The RBI's policy, meet you again tomorrow. Anything? You have a doubt? Anyone?
Yes, sir.
Yes, doubt.
Not a doubt really, sir, but I just wanted to talk to you.
Okay, not a doubt actually.
So, if they find any method to find this GDP instantly.
If it is available instantly, right? If GDP deflator is available instantly, that is real GDP, nominal GDP, if they are available instantly, then what would be the best measure of inflation? GDP deflator. Then it will be the best measure. But still at micro level, if I have to target and control inflation, still I am going to do what? CPI calculation. Still I have to do it. Okay. Anything else? Backside. Yes, sir. How much is it? Okay, 105 it is. So from 100 it has become 105, means 5%. Overall 5% itself you will get as what? Inflation. Right? So the number you are going to get here is 105, which essentially means what? There is 5% inflation. That's what it actually means. Okay. Anything else? Backside, anyone? Nothing? Shall we leave? Can we have a test? I think you already have a test. CMT you had? You did not check. You have checked? Yes? In the app below the recordings of the first chapter, you have the CMTs now. Okay. After the completion of every chapter, you are going to get the CMTs. Solve them. Just solve them. Any doubts you have, you bring it here. Yes. Thank you. Online people, thank you. You have any doubts?